How to manage cryptocrashes. With the passage of time, cryptocurrencies have grown to be the most popular platform for investing significant sums of money and achieving the desired profit margin. However, cryptocurrencies frequently crashes in the open market. As a result, we must be aware of how to manage and resolve breakdowns. As you watch this video, we have to give you an advice on how to deal with cryptocurrency breakdowns. So, have a look at the entire video and don't forget to like, share and subscribe our channel, The Non-Fungible Contents. In recent weeks, the price of cryptocurrencies has plummeted, with Bitcoin BTC down over 30% from its high on November 10th. Despite a significant decrease this weekend, Bitcoin's year-to-date gains are still at 55%. Investors, especially those who are new to cryptocurrencies, will find this volatility extremely stressful, even if they are aware of the risks. The beginning of 2022 has been very awful for cryptocurrency investors. Bitcoin has fallen to its lowest point since July 2021. Other cryptocurrencies such as Ethereum, Cardano, and even Dogecoin have followed suit. The amount of searches for Bitcoin did increased as the whole crypto market cap fell by $90 billion in 24 hours. While experts disagree on whether the Bitcoin crash is a temporary setback or the beginning of a wider recession, it is obvious that the increased volatility of the market offers several lessons for investors. Whether you've been hesitant to invest in cryptocurrencies or are second-guessing your decision, here's how the crypto crash highlights the risks of cryptocurrency investments and what you can do to mitigate those risks. Why is the crypto world imploding? The experts believe that this is due to the larger climate on a worldwide scale. Not just in the world of cryptocurrencies are things not looking particularly promising. The probability of a recession is growing, inflation is soaring, interest rates are climbing, and the expense of living is becoming increasingly burdensome. The stock markets are also shaky, with the S&P 500 in the United States currently being in a bear market, down 20% from its recent high. As a direct consequence of this, even the largest investors have less discretionary spending money. A lot of regular investors, who aren't wealthy people who run hedge funds or large organizations, but regular people like you and me, have less money to invest in anything at all. A lot of people think that now is not the right moment to make an investment in something as risky as cryptocurrencies because of its high degree of volatility and unpredictability. Because it is not regulated and is not protected by the authorities in charge of finance, if you use your savings to invest in it, and it loses value, or if you lose access to your cryptocurrency wallet, your money is gone. One of the prominent reasons of crashing crypto market is that the US Federal Reserve has decided to raise interest rates in order to reduce inflation. According to a Wall Street Journal story, the Fed will pursue an aggressive campaign to raise the cost of debt, restrict spending, and rein in record-high inflation. The fast rise in interest rates is widely seen as a leading indicator of a recession. If you are observing that the asset's value in your crypto exchange account is declining, here are some strategies for dealing with the crypto roller coaster. Number 1. Stay calm and cool. Whether you decide to sell your cryptocurrencies or use a drop as an opportunity to buy more, you must remain calm. Making emotional decisions, especially while trading, rarely yields positive results. So before you jump into the market in a panic, consider why you're trading cryptocurrency in the first place. Do you invest because you see a long-term opportunity? Or are you just looking to earn a quick buck through short-term trading? The answers to these questions can help you make the best decision. In either scenario, you should act in accordance with your own objectives. In other words, you should think accordingly if you believe in the long-term opportunity, or if you're here for a quick exchange, keep that in mind. Number 2, stay focused on the long term. Investments in cryptocurrencies are exceedingly volatile. According to the graphic, we've already seen many large price drops in 2021. After each fall, crypto prices eventually rise and reach new heights. Don't get caught up with the 24-hour charts, instead zoom out and look at the entire year. Ups and downs are a natural component of all market cycles, but they're magnified in the case of a new and largely untested investment like Bitcoin. You can afford to wait out the drops as long as you haven't invested in the money you need in the short run. Number 3, discover why the market is in a slump. Understanding why prices are falling is a good thing in case it affects your original investment concept. If your rationale for investing remains valid, all the considerations I gave above are valid. But if something is radically changed, such as a security incident and you no longer trust a certain project, it's a different issue. Assume you purchase a cryptocurrency because you believe the underlying blockchain technology will transform a specific sector. Rumors that quantum computing breakthroughs have rendered that technology obsolete have caused the price to plummet. If these reports are true, you may want to rethink your investment because the reasons you had for making it may no longer be valid. There are several factors for recent market-wide drop in the case of a recent catastrophe. One reason is the investor aversion to risky assets as a result of the new Omicron COVID mutation. Furthermore, the Fed has warned that interest rates may be raised, and there are still rumblings about tighter regulation. Number 4. No desperation. When the value of your cryptocurrency investment falls, it is normal to want to cut your losses and sell your holdings. However, this frequently means that you sell at a low and miss out on any subsequent recovery. Assume you observe the price of Bitcoin declining by 20% and decide to sell your holdings. What if the price suddenly returns to its original level? You have lost 20% of your investment and may be hesitant to repurchase it. In the short term, you never know what prices will do. They may continue to plummet, but they may also rapidly rise. So put your faith in your original research and investment concepts. Be certain that the price of your Bitcoin investment will return if you believe in its long-term value. Number 5. Consider how to act. After you've calmed down and assessed the situation and what it implies for the future, you'll want to decide how to proceed. Are the concerns actually opportunities disguised as risks? If you perceive it that way, you may want to keep your position or take advantage of a price drop to invest more. Are the assets likely to remain or worsen? If this is the case, you should cut your losses and exit the game for the time being. Is the scenario very complicated? If you can't see the future, consider splitting the difference and selling some of your stake today while still having possible upside tomorrow. Whatever pathway you take, you'll need an action plan that reflects your perspective on the possible risks and opportunities presented by cryptocurrencies. However, it is worth noting that some of the world's smartest investors will not touch cryptocurrencies and will strongly advise you against doing so at will. A drop in the Bitcoin markets may have been you worried. Use it as a wake-up call to reconsider why you were in the market in the first place. What are the opportunities and risks? While Bitcoin, for example, has recovered strongly following prior large dips, there is no assurance that it will do so again, especially if it is facing serious existential problems as countries prohibit its usage and potentially ownership. And it is the type of real danger that can either profit or kill an investment if the reality is less severe than anticipated. This brings us to the conclusion of our video. Do not forget to like, share, and subscribe to our channel, The Non-Fungible Contents. Stay tuned!